Hello traders and welcome to another video review. Today is Wednesday, December 6th, 2023. Let's find out what is going on the economic calendar for Forex traders for today. As you can see, I got only the most important data scheduled for release, and those data are for the New York session only. So what do we have here? We got ADP Nonfarm employment change is scheduled for release at 2:15. The market participants expect the increase from 113,000 to 130,000 of the newly created jobs. So pretty impressive, let's say, expectations. As you can see, in 2023 there has been ups and down in the ADP. The peak was in the July 2023 with the actual number of 497,000 created jobs. So as you can see, right now the ADP number is steadily decreasing. So any hike to the upside, any spike to the upside would be apparently considered as the bullish for US dollar. As you can see, the green, let's say not green, but the golden line here is kind of a forecast line. So the expectations might be very much limited because of the decrease in the in an NFP, sorry, in the ADP. But you can see the situation is very dynamic. So any spike to the upside might be a big surprise for the market participants. All right. Bank of Canada interest rate decision is scheduled for release at 4 p.m. The market participants expect the Bank of Canada to leave the interest rate at the level of 5%. Let me just figure it out for you guys what is going on here. As you can see, the Bank of England, let me just take a look at the actual rates, has been hiking the rates since the December of 2022 towards 4.50, and now last hike was in the July 2023 to the level of 5%. It stayed on this level for the next few months, and there is actually no reason for the Bank of Canada to hike the interest rate at the end of the December, at the end of the 2023, in December 2023. Actually, the forecast was a little bit, as you can see, the forecast was a little bit surprised because the market participants expected the Bank of Canada to leave the interest rate in the June at the level of 4.5. Actually, they hiked to 4.27, and then they hiked it towards the 5%. So as you can see, if there is a hike from Bank of Canada, it will be a great surprise for the market participants as well. And the next event, the most important event for today, is crude oil inventories. The crude oil inventories are scheduled for release at 4:30, and this time, as you can see, we the market participants and we as well expect a drop of minus 1,354,000 of the barrels of the oil. So as you can see, let me just take a look at the actual numbers. The output is getting steady around the level of the 10,000. Sorry, 1 million, of course. And as you can see, it's sometimes going up, going down, going up, going down. It's not that apparently it's not anything big. Here in the chart, if there is surplus in one week, then there is a decrease in the other week, and then it's a surplus in the 1 week, there's a decrease, there's an increase. So nothing serious is going on here. Minus 10 to plus 10, this is the range that we've been trading since actually the March 2023. So if there is a decrease lower than minus 1,354,000, 354,000 barrels, then of course that might be a surprise for the oil traders, and then we might see some kind of a spike to the upside. Please remember, today is the ADP non-farm employment change. That means that on Friday there is non-farm payrolls data, is non-farm payrolls Friday. Okay, that's enough for today. Let's switch to the euro dollar because of the US data. So for our chart of the euro dollar is showing us another deterioration lower. Why this is happening? Basically it's because the market participants, especially bulls, were not strong enough to go and test this zone here, 1.0888, 1.0897, and they didn't even follow this green candle, which is why we need to remove it. They've been capped at the level of 1.0804 and then reverse lower. We got the new local low at the level of 1.0776. So the movement to the downside decreases as long as we trade below this level here, 1.0804. The outlook remains bearish, and we are very close. Let me just zoom out. We are very close to this first level of the technical support at 1.0770. Apparently we are only 6 pips away from this level. For now, the level of 1.0826 is now the technical resistance. So the number of the technical resistance levels is increasing on the euro dollar as the bearish pressure is getting stronger and stronger. Momentum is still negative. Momentum is still very weak. The market hits the extremely oversold conditions, and there is no sign of any kind of a bounce to the upside, which is apparently needed on the euro dollar for our chart. So what we can see here is that the market is hovering still around the level of 30, which is of course the extremely oversold level, and maybe when we hit this this level here, which is the technical support at 1.0770, 1.0757, and the last one is 1.0747, so there is a pretty nice zone here. Maybe when we hit it there will be some sort of the bounce. Let me just show you guys this using the arrows. This second arrow must be green because we await for some sort of the bounce, and the bounce might come with the market moving to any of the technical support levels. So maybe one of these levels will be good enough for the market to bounce higher. For now, of course, we are keep moving lower. The outlook remains bearish in the short term. Let me just make this opportunity to take the screenshot. Here you are. The next is of course the US dollar to the Canadian dollar, because we are ahead of the interest rate decision. So let's just switch to the daily to see the overall picture. The overall picture looks very negative for bulls as we are deteriorating even further. The last movement to the downside was quite big, as you can see here. Okay, this was the biggest correction, 2.29 let's say percent, and this time we got this movement to the downside, which is even bigger, which means that that movement here, 3% basically, is the biggest correction during this up move, which means this is not the part of this impulsive wave progression to the upside. So we got the overbalance of price and time. So we have finished our movement to the upside at this level here, 1.3898. so this is our technical resistance. So we can put it red. Okay, so that's the technical resistance. And of course, if this is the technical resistance, then we need the technical support as well, and the technical support is located, of course, at 1.3091. So this is the range the market has been trading for the last almost 6 months. And right now we are approaching the technical support located here at the level of 1.3380. So this is the technical support, and there is one more level, to be precise, on the daily time frame chart located here at 1.3386. So this is the technical support, one more technical support, and the local swing low is located at 1.3479. So this is the support as well, and the technical resistance, short-term technical resistance, is located at the level of, well, it should be 1.3568, but the market passed this level, so I think that 1.3628 would act as the technical resistance whatsoever. So that's the outlook on the daily time frame chart. As you can see, we are testing to 100 period moving average as well, 1.3593, and we are trying to bounce from almost the extremely oversold market condition. Nevertheless, the momentum remains weak. The momentum remains negative. On the 4-hour chart, it's even it's a little bit better, because we bounced from the extremely oversold market conditions after the bullish divergence was made, okay, between the price and the momentum indicator, and now we are trying to, of course, test the level of this intraday technical resistance, which is located, let me just find out this level here, 1.3593. As you can see, the market has been trying to move above this level, but it was capped, barely moving above the level of 50. So 57 was the high, right now it's 54, and if there is no movement to the upside, we can see another deterioration lower on the US dollar to the Canadian dollar, as the down movement would likely to be continued soon. And last but not least, let's take a look at the crude oil, because of the data that are scheduled for release very soon. What do we have here on the daily time frame chart? The first thing is, of course, the situation with the range. The range is located between 63.68, so that's the range low, okay, so that's the range low, and of course the range high is located here, 95.02. Okay, so that's the range. We are talking about this kind of a trading range. We got first wave to the downside, correction, wave to the another wave to the downside, touching the extremely oversold conditions, some sort of the bounce ABC to the upside, but we never crossed the level of 50, which is the neutral level on the daily time frame chart of the crude oil, and now we just made another local low and swing low below 72.16. The local low was made at 71.33, and we are heading towards the technical support. This technical support is located roughly around the level of 66.80, so this is the next target for the bears, and the momentum, as you can see, is very strong. The market keeps pushing to the downside. You can see that the corrections during this up moves are not very big. So if you take the price range and you, for example, compare this correction, it's 11%. Let me just compare another correction for you. Another correction is roughly, let's say, 10%. So no, they are not equal, but they are quite similar. So we shouldn't expect any bounce bigger than, let's say, 10.5%. If there's a bigger bounce than 10.5%, 11%, of course, we might have some sort of the trend reversal, and the crude oil can go back to the uptrend again. So we can see some kind of a movement to the upside, maybe when this level of the technical support is hit. Let's go back to the 4-hour chart. The 4-hour chart is very similar to the daily time frame chart. Let me just move this measurement here, and you can clearly see that the intraday technical resistance is still located at the daily lows. Daily low is, as you can see, right now at the level of 72.16. We just broke below this level. We are edging the extremely oversold market conditions, so a bounce is about to happen on this market. It looks like the bounce will happen before we will hit the target for the bears. That's the first technical, let's say, technical resistance. The other technical resistance is located at 73.79, and the other one is very close, 74.06. So only if we break above these two levels, the market might reverse a little bit higher, might continue with the pullback to the upside, correction to the upside. Otherwise, we can see only this kind of a price action. Let me just find the arrow. Arrow is here, so we can see some kind of a movement here towards the technical resistance if the data from the oil will be better than expected, and then the reversal. So the key level here is still located at that level, 70. This is 74.6 and 73.79. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.